How's everybody doing? Amazing. We're in Miami. I'm so excited to be here. We have such an amazing conversation for you guys. Obviously, before we kick in, I want to make sure I give everyone a chance to introduce themselves. So for those that are hearing my name for the very first time, my name is Ashley Wright. I've been in this space for, I think, 9 or 10 years now. Work with a lot of really great organizations, but really focused on digital asset strategy, helping a lot of Web2 companies get into the industry, learn the technology, really be able to make that transition. And then I'm also working on some new ventures as well at the intersection of like AI, data, and infrastructure, and how that also works in blockchain. So super excited to be here, but gonna pass it off to my amazing panelists to kind of introduce themselves.
Hi, everybody. Thanks so much. Raja Chakraborty. I'm the Chief Business Officer at the Stellar Development Foundation. We're a layer 1 blockchain, which has been around for about 12 years, focusing on cross-border payments and more recently asset tokenization. I too love Miami. As you can tell from my head also likes to shine in the Miami heat, so happy to be here.
Hi, everybody. My name is Hugo Finkelstein. I'm the co-founder and CEO of Rise. And what we are is a payments and payroll company. Essentially, we help companies hire, onboard, and pay contractors and employees all around the world. So we've built a full infrastructure around payments, identity, on which we're stacking all these applications. So we've been around for 4 years now, and our booth is actually right behind it, if you guys want to chat with us after. Nice to be here.
Amazing, amazing. So obviously you guys know we have an amazing conversation that we're about to have. So let's dive right in. And so as we kick things off, and obviously we're here to talk about B2B breakthroughs within the industry as well. So when we talk about cross-border breakthroughs that are happening right now in the industry, what actually is working versus what's maybe still just a promise at the moment? Maybe we want to kick things off?
Yeah, I mean, I kind of try to simplify. I think anything that has to do with kind of settlement, payouts, or FX, those are all real things that I think are being addressed today with stablecoins and blockchain technology. When I start thinking about some of the more complex things, i.e. things that require like deep ERP integration or multi-jurisdictional settlement between two different areas that are under different compliance regimes. Those are the things that I think are still future and still need to be unpacked and unlocked. Certainly, we have been in a very fortunate position through the history of Stellar, being kind of early on and starting to see the value of like the consumer-to-consumer payment, really that remittance payment, and seeing the optimization that happened there. And that is something that, without a doubt, has been kind of explosive, and I think was really kind of the accelerant for a lot of what we saw with stablecoins, and certainly for U.S. dollar-backed stablecoins, moving monies from the United States to perhaps like an area in Latin America where there might have currency fluctuation or other sorts of risks associated, and people wanted to be able to access kind of like a dollar-backed savings account. And I think that was the first area we saw a lot of value. Increasingly, as we've started to see a lot of particularly small businesses really find the benefit of stablecoin payments, we're really seeing that area explode. And in tandem with it, what we've seen is this just kind of gap that has been accrued through legacy systems around like correspondent banking systems, really high FX costs, costs that can go anywhere between like 5 to 7 to greater percentage per transaction. What we've now seen with new infrastructure coming on board with different types of companies who are really focusing on optimized FX is that in certain areas you can actually drop that FX rate down to 20 to 25 basis points. And these are real transitions that are happening. Companies like Etherfuse that are built on Stellar are really trying to drive that down. And so that's pretty phenomenal. But these other areas where we're thinking about like institutions starting to communicate and send money across borders, I think there's still a lot of things that need to happen. When we talk about regulatory clarity in the US, that's great, but there has to be kind of correspondent clarity across regimes such that those dollars can kind of actually fluctuate between the two areas.
I think we've agreed with everything that you said. I think the breakthroughs we've seen, there's different applications that I'll tell you about, but most importantly, I think it's in the markets where the fiat ecosystem is still a pain. So think about like Latin America, Southeast Asia, Africa, etc. We see a lot of breakthrough, especially us. Like we do payments to thousands of contractors every single month. We see that there's more adoption and demand for crypto and stablecoin payments in those regions versus Europe or the US. So everything that's contractor payments or workforce payments, treasury movement and treasury management across global companies, and especially crypto-native companies, but it's starting to become more and more like Web 2 traditional businesses. There's still a big promise around adoption of like merchant that are accepting stablecoins. I think we speak about it a lot. I think we're seeing the first signals with all the card networks that are enabling stablecoins, but we still have a lot to go there.
So you both touched on something that was really interesting, talking about the volume and how things have been really shifting quite a bit when it comes to stablecoins. I'm curious, for when you look at some of the work that you're doing, what has things look like in terms of the growth of stablecoins within, the industry and what you're seeing on your perspective? I would say maybe 2026 versus 2025. Curious to hear your thoughts on that.
I mean,
Yeah,
I'll start. I think, obviously there's much more demand, much more volume, much more adoption, and we're seeing like internally, I think like last year we did around 500 million total in payment throughout the year. We've already passed that, and we're just in May. But everything stems from regulatory clarity. And once you have regulatory clarity, so the Genius Act and other, MICA and other, laws that are passed around the world, you see financial institutions becoming unlocked, which then unlock adoption of, traditional businesses or traditional CFOs that want to implement all these systems. So I think that's only going to grow. So I think we're like at a very exciting time.
Yeah, I'm super excited to like dive into your business further. I think there's just so much opportunity there. I think from our perspective, we get to see it at the infrastructure layer. So on Stellar just last quarter, there was $5.5 billion in stablecoin volume that happened. I think the big thing that we're seeing now is just this idea of velocity really starting to accelerate, and I think that's the big transition. I think last year was about the promise of stablecoins and people starting to adopt it in kind of key use cases. Now we're starting to really see that asset velocity and the money movement starting to happen. But I think like what's really important, particularly around the edges, and frankly, like some of the areas that you guys saw for is, the emergence of different types of stablecoins addressing different market needs, I think is pretty interesting. And so, the more I think there's been, without a doubt, kind of like a US dollar dominance in stablecoin if you just look at total market cap. But what we're starting to see is a lot of incremental investment within different jurisdictions, call it like within the G10, on like focusing on their own local stables. And I think that's actually like the really interesting thing, because there's potentially a fight against dollarization, but there's value that's being attributed into local economies, which is, hey, look, like if I want to go work in my local merchant network within this country, I want to be able to transact in a stablecoin that is tagged to my my local currency. How do I make that happen? How do I pair these two assets so when we actually optimize against these kind of different flows, these B2B flows, how do we make sure those pairs work, and how do we make sure there's sufficient liquidity so that these assets can actually be able to operate with that promise of the reduction in FX cost? Because ultimately, if you think about like traditional networks, you're talking about a lot of incremental costs that are built into the system through correspondent banking. But if you don't have sufficient liquidity, even if you're able to replace the system, you're not going to be able to really reduce that cost structure, because there's just not the ability to transition these assets. And so I think that's one of these key focuses that we're seeing happen in 2026. Yeah. And I think we're going to really see that accelerate into 2027 and beyond.
I'll add to that. I think like there's a lot of fragmentation around stablecoins. Like it's becoming like kind of a commodity to be able to launch your own stablecoin. The real money is in the orchestration layer that's going to be able to like bridge the routing between all these assets and manage on-chain FX. Sure.
Yeah, it's interesting you say that, because that's something I think about often, right? Obviously, we're bringing all this value and all these assets on chain, but at the same time, it's the industry itself is still very much fragmented, right? So it's interesting to see what next year's going to look like, or even the next 3 years of, like you mentioned, which stables are really going to be more dominant than others, where people really tying that value. And then, of course, the liquidity piece, which is huge, because you can have all these amazing assets on chain, but if there's no liquidity, like how do you really use it? And like you said, when it goes back to those stable coins, I think the ones that are really providing the most value and are also providing value, but also making it easy to access across the board, that's also being that connective tissue, I think those are the ones that are really going to last. Right. But I guess to take a step back a little bit, for maybe those organizations that are maybe here, that are interested to understand, like, what do they really need to make that shift on chain and really get into the space?
So many things. There's, I think compliance is a big piece, because obviously when you talk about, a traditional CFO, Fortune 500 CFO, what they need is clarity, like, around the rules, but also around compliance. So, compliance that is embedded in a product that is jurisdiction aware. So think like KYC, KYB, AML, different rules, requirements, thresholds, reporting, et cetera, and tax reporting as well. That's one of them. Integrations. I think it's one thing to have, your finances, corporate finances on chain, but what you need is actual access to like your ERP system, your HRIS, your accounting system. So think like, Oracle, QuickBooks, NetSuite, et cetera. A lot of education and UX, like blockchain and crypto UX abstraction. So and I think we're on the way. Like I think it's already a thing of the past, but it's only going to improve from now. But like the ability to interact with blockchain, crypto wallets without knowing that you're doing so, I think these are the few things that you'll need.
I'll double down on compliance. I think that's one of these areas where we talk about compliance, we say compliance, but I really think, particularly at an institutional level, like if you're not designing your entry point with compliance being the first thing in mind,
yeah.
I think you're already kind of losing. So, all of those things you talked about, there's travel rule, there's all of those other things that are necessary to be able to operate at scale at an institutional and enterprise level. And so I agree that that is absolutely critical. The other piece that I think a lot about, in addition to the points that Hugo brought up, which I agree with totally, is just this idea of the issuance of a stablecoin is kind of the easy thing now. There are many providers out there who you can go to that will help you be able to launch that stablecoin. What I think is really important is that what do you do with that stablecoin, and how are you actually trying to accrue value out of it? And so a stablecoin that is launched that is not interoperable with other stablecoins starts to have a limitation in its value. One that is not composable has a limitation on its value. If you are not able to actually leverage others being able to access it and then create more capital flows, that has limitations on value. And so there's this question about, okay, do I build a stablecoin that's designed just for my internal settlement mechanism, which I think can be appropriate for some financial institutions which are really just looking for a specific optimization, that's okay. But if you think about the plethora of stablecoins that are now being offered, I think the reality is there has to be a version that creates convergence towards a set of stablecoins, and I don't think there's one stablecoin to rule them all, but I do think there is one interoperability layer that must rule them all, because if you want that stablecoin to be able to operate at a global scale and do all of those things that it, in theory, should be able to do, why limit it before you can do it? It's like with an iPhone, why would I buy an iPhone if I'm only able to download one application? That feels like a severe limitation on an infrastructure. What really, I think, changes is, and by the way, I think this is kind of the new thing that we're starting to talking about 2026, is we built the iPhone already. That technology is there. We want to start talking about the App Store, right? What are all of the things we can do about it? And so I think those are the things that have to be top of mind.
Yeah, I think that theme is that convergence. That's what we kind of keep talking. And I think over the next maybe 6 to 12 months, or even a little bit more, I think we're going to start to see a lot more people focus on that, because obviously, like you said, everyone's launching a stable coin, but at the end of the day, it's kind of similar to when we look at all these different crypto assets. It's not all of them have value, not all of them have utility, or not all of them even last or stick around, right? So I think we're going to start to see something similar as a lot of companies realize, hey, yeah, we launched a stable coin, but how are we really driving value? Which kind of leads to my next question. Obviously, you mentioned it's fairly simple for people to launch a stablecoin, but I guess what are the bigger challenges when it comes to actually scaling?
When you launch a stablecoin?
Correct. Yeah.
I think distribution. I mean, it's all the point that Raj was saying, but distribution is key. Issuing a stablecoin is becoming a commodity, but making sure that people actually use it and hold on to it is the moat, really. So that's big, and I think you need to have a very strong off-ramp infrastructure. So as much as we love stablecoins, I think we still live in this world where counterparties, third parties, they need to pay their rent in fiat, they need to pay their mortgages in fiat, they need, essentially to live, they need to still operate in fiat. So having a very strong partner network where you can off-ramp all around the world at very competitive rates is key, and it's a challenge.
Yeah, I agree. That last mile, I think, is the key unlock for everyone. And so I I feel like we just agree on basically everything, which is awesome. So
We're in the same space, so
yeah, we're in the same
it makes sense.
but I think distribution in the last mile, I think, again, we've been fortunate operating at our infrastructure layer and having, I think, a front seat over the last 12 years on this. But we have very much focused on local economies and what is necessary to be able to leverage that asset once it gets there. And so I think one partnership that many people know Stellar for is the partnership we've had with MoneyGram over the last 5 years, where what we worked with them on was being able to take a digital asset and then receive it within a specific economy, and then somebody can go to a MoneyGram agent and then off-ramp that digital currency into fiat. And that's really valuable. It's very powerful. It means that usability becomes very high. But the reality is that that's not the only off-ramp. That is going to be still fairly limited by what happens within that agent network. There has to be sufficient liquidity there. So how do you use it in all parts of the ecosystem? And Hugo mentioned the merchant network, and this is an area where I have so much hope, and I don't think we've actually seen it, but being able to leverage that asset in a digital economy, I think, is critical. And so can a merchant accept it? Do you have all of the appropriate methods? Do they have their own kind of Web3-based wallet to accept it? Is there a card product to deliver that? These are all the different areas and innovations that I think we're really thinking about. And ultimately, you don't want the stablecoin or the digital asset to be the thing. You want it to be the underlying element and be able to operate within the economy. So I think that's absolutely true. And I think the reality is, if you're able to solve the last mile, you've solved the distribution problem, which is ultimately where we're trying to go. But that focus working within each and every economy, figuring out how it looks, where it's going to operate, I think those are really clear. And then we haven't really yet talked about this, but then there's going to be kind of this transition to, well, beyond stablecoin, there's a whole other set of assets that people are starting to use, which I think is also really exciting.
Yes, you're like going, you have so many things going through my mind at the moment. So I'm like, okay, we talk about the innovation side, obviously the assets, but I want to kind of focus on that last point that you mentioned, because obviously we're here to talk about breakthroughs within the industry and even outside the industry a little bit as well. But as we start thinking about cross-border breakthroughs, what are you seeing in terms of innovation outside of maybe currencies? Are you seeing anything else that's maybe pretty innovative as well?
Treasury, obviously it's a huge breakthrough. And there's a lot of adoption around that. I'm very bullish on on-chain identity and reputation. So us, for example, within Rise, a core piece of our infrastructure is the Rise ID. Essentially, it's a unique smart contract that each payee will own. They use it to authenticate themselves and also use our smart contract ecosystem, but we can store attributes onto it. So in our case, in payroll, think about your KYC, KYB, so identity primitives on that smart contract, your pay history, your pay trajectory, your pay stubs, certificates from boot camps, et cetera. And we're trying to find partners that can consume these attributes for products like lending, for example, or mortgages or loans. So very bullish on that. I think that's the future really of if you take this, HR, finance, compliance, the thing in between is identity. So very bullish on that, and also real world assets, tokenizing them, using them as collateral, et cetera, for these products are huge.
I can't wait to talk to you about identity after this, because I think that's frankly one of the areas we've been trying to think about deeply within kind of this infrastructure that we're building is, can you build an on-chain identity, and then can you make that on-chain identity transportable? Because ultimately, when I think about all of the different constituents that operate around the blockchain, we will have somebody who on-ramps maybe through a MoneyGram location, wants to transition it from wallet to another wallet across border, then they want to off-ramp it within a local bank, and all of these different elements that touch the blockchain all have their own individual kind of identity, KYC, all of these requirements. And so it creates user friction, frankly, to be able to transmit across all of those different areas. So in a single transaction, you may have 5 different touch points where you have to go through that whole thing. That's friction filled. So I really like this idea, which I want to unpack with you, is how do we grow that at scale? I think in terms of other asset classes, I think without a doubt RWAs is an area where we've seen just tremendous growth. I mentioned this company Etherfuse earlier on, which is a portfolio company of Stellar, which we worked with deeply. They've created a very unique stable bond product. And the idea there is that they've actually worked with the with a number of governments, but let's focus in. So in Mexico, they worked with the Mexican government. They got a no-action letter where they can actually tokenize Mexico's sovereign debt. And that sovereign debt becomes a stable bond. It drives yield. So what does that mean that you're able to do? Well, you're able to take like a US dollar pair it with this stable bond, use the yield to offset the FX cost, and then pair that back to a local digital peso. And now what you've done is create, like, effectively in a single transaction and potentially through a smart contract, basically wrap a single transaction, which is effectively offset all of that. I think that's like really exciting innovation that is happening. But it's not just there we're seeing all of this innovation. We're seeing it across other RWAs. Certainly, in Europe, we're seeing a lot of push on different RWAs. Spyco is actually an entity that had about $500 million of RWAs. Just in the last quarter, they grew to almost $1 billion in RWAs. I think it was a European T-bill, and that's, most of that growth actually happened on Stellar, which was super exciting. But we also just celebrated 5 years of Franklin Templeton's Benji asset. And the Benji asset is super cool. It is now this tokenized money market fund, but they've now put it into the ability to actually do peer-to-peer transactions with a money market fund. Again, like, this is transitioning money from being what I call like dead money or lazy money into like active money. And that is very, very exciting because as you start to unlock those opportunities and start bringing the concept of yield into emerging economies, I think you're actually talking about like points of difference, which I think is going to be transformational across them.
It goes back to that whole idea that I love within the industry, obviously around decentralization, but even more so access. Right? When I think about the industry, I think about access, I think about freedom. And like you said, in certain economies where they don't have as much access to capital, access to resources like we do, or even have an established financial ecosystem, now they have access to all of that, right? And it's exciting. And then the digital identity piece, I mean, we could have a whole conversation on that alone because that is so exciting. But I think even there, we're starting to see that same challenge of that convergence is missing, right? Because you can still build everything on a specific network and so forth, or a specific use case rather, but if they're not connected or you can't transfer that identity, you can't use it in different places, you're still gonna have the same hurdles that we see now, right? Where it's, once again, creating that friction for consumers as well. So there's a lot of opportunity there, but at the same time, there's a lot of things we gotta work on to make that happen.
One additional thing I might highlight, we're talking, well, a lot of these things touch on like consumer side, but like on the B2B side, I think the ultimate unlock is when we bring institutions into the fold. And when we start talking about cross-border transactions, this is why like the compliance layer is so important. I think the number is, I think there's $30 trillion that is currently locked in Nostro and Vostro accounts right now, globally. So this is basically my money sitting at your bank or your money sitting at my bank to be able to make that transaction happen across borders. Now, like that is just dead money sitting there. And institutions need to be able, like that is I think the institutional unlock is how do you transition that money from being dead money to being active money to being able to operate across scale, and that I think really unlocks economies. But the reality is in the current system, you have to work through correspondent banks. It doesn't matter that you can launch a stablecoin, you still have to work through each of these different elements, and so how do you unlock that? I think the things that Hugo was talking about, just like from like all of like the compliance layer stuff, I think we have to prove those things out. We have to be able to show the scales. We need to make sure that all of these different corridors work and that we've got the regulatory regimes like talking to each other. And that's when you are unlocking, I mean, like that is a tremendous amount of assets, and that's going to be the transformational hit. And I don't know when that happens in the next couple of years, ideally, but like I think that's what we have to focus on.
And I think like, and to go back on your point on institutions being unlocked, like you need to get the government on your side. So like, there's the Genius Act, MiCA, other rules around the world, but like all these at the city, state, federal levels, like people need government needs like proof points from other peers to know that it's working and adopt these same rules, and that's the only way you can unlock the whole wave of adoption, really.
And I mean, it's interesting. We're starting to see some of that already. I think, obviously we want to see the industry a lot further ahead, but we're starting to see progress, real progress. Yeah. I think this is probably one of the most exciting times in the industry, which, a lot of times people look at the numbers and all of that side, the price action side of things, and feel like maybe the industry is not happening, but no one that's really building is talking about that.
Yeah.
Because we're talking about the technology, we're talking about digital identity within the space, RWAs, and all the things that are actually happening because all this institutional capital is really flowing into the industry with the growth that we're seeing with stablecoins
Right.
And so forth as well. So I think like there's the opportunity is there. And even though on a larger scale, some might look at it one way, but it's like if you really look at who's building and where the capital is coming from in the industry, I really believe like this is probably the most exciting time right now.
And if I can add something around like government and these agencies, like something that we're doing, there's a rise of like guaranteed income programs or disbursement programs that cities, states, and even at the federal level are doing. So when you tie this to like being able to pay your citizens in like an efficient, secure, and cheap way, that's when blockchain becomes interesting. Like both from like an identity verification standpoint, you can just with a click of a button you can verify your identity and then receive your payments. So we're exploring those things because I think like also when you think about like AI and is it going to replace us and all that thing, like obviously universal basic income, guaranteed income programs like are becoming more and more of a thing. So and I think blockchain unlocks them. Really.
It does. And I think, of course, as long as we can make that customer experience seamless, that's where we're really going to start to see growth and really start to see the industry scale even more.
Yeah.
I was just on the UBI point. I think that's this area that's super interesting. So we actually worked with the government of the Marshall Islands, which is effectively like
where?
It's the Marshall Islands. That's a good question. Where? So there are a set of islands in the Pacific Ocean. So I think the stats are there's like 29 islands, 72 atolls, and like 1,200 additional like tiny little islands. If you collapse them all together, it would basically be like the density of Washington, D.C., but spread across an area the size of Mexico. So that is a really interesting use case. It is a U.S. territory, and the U.S. government actually has a grant program there because it's where we do a lot of military testing. And so they've actually now provided, like they have this grant that goes in there, and the challenge the Marshall Islands wants to do is be able to deliver universal basic income because it's very difficult to access a bank if you're sitting in like an outer atoll because there's only 3 banks across all of those different islands. And so leveraging digital assets is exactly the way they've been able to do this, basically building another stable bond product and then distributing those assets directly into wallets. And so I think those are the unlocks that are going to really show the path forward.
And another like interesting use case is like all these like foundations, organizations that send workers in developing countries. These workers don't have access to like their bank accounts when they're on the spot, so getting paid in stable coins is actually a thing too.
It is. I don't know about you guys, but I'm so excited. We've touched on so many amazing things. So amazing areas as well within the industry. Unfortunately, we are out of time, but before that, maybe you can just share where everyone can reach you as well.
What's up? Sorry?
Where everyone can reach you, I guess.
Oh, right here. There's the booth over there in the corner, but otherwise, riseworks.io.
Yeah, and for me, please visit stellar.org, or you can reach me at raja@stellar.org, and I'd love to connect with any folks who are interested in all of these areas of building.
Amazing. And for myself, Ashley Wright, you can find me basically on all social media at The Wright Success. Thanks, everyone. It was great having you here, and we look forward to seeing you around. Thank you.